Hello guys, welcome to the Trading Parrot. Bitcoin is down roughly 16% from the highs. It managed to hit around 91k, and with 2.3 billion in liquidations across all the crypto markets, Bitcoin just took 400 millions in liquidations, leaving 1.9 billion affecting the altcoins. This is definitely a capitulation for altcoins, considering that the reaction of Bitcoin seems pretty mild relative to what's happening to the rest of the market. In today's video, I'm gonna focus on the potential for further downside. We're gonna look into all the data to understand what are the chances that we could bounce from here. We have plenty of motivation to go to the lows around 100k. We will discuss those levels, and I'm gonna be focusing on building a position, which I have already started doing. I'll let you know at what levels I'm planning to add and how I'm approaching the fears coming from the market when it comes to the tariffs news. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. We continue to get very close to those 1,000 likes. Yesterday, we were around the 800, so getting closer day by day, which is awesome. Only with your help, we can get to 1,000 likes and finally prove this algorithm from YouTube that is convinced that my channel shouldn't be shown to anybody, and instead you should be watching TikTok like trading advice, which is just a shame. But anyways, I'm planning to make 2 more videos because I don't want this one to get too heavy. I'm gonna separate a second video around general markets. I want to put this out very quickly because I want to see the pre-market reaction of the stocks. Spoiler alert, they are slightly below the closing price of Friday, as you would expect with all the fears with the tariffs starting from the 1st of February, and also the fears that more tariffs may come in the upcoming days, even applying to Europe, UK as well. You know, we don't trade the news, we don't trade the fear, we trade data. So in this video, we're gonna focus on that data. In the second one, I'm gonna cover general markets and how those are reacting, because that's gonna complement this data and give us a hint of what we should be looking in case we continue down for that second order to come in place. And there's gonna be a third video where I'm gonna cover the Bitcoin dominance that's roughly now at 64%, which is crazy. And we talk about that in the weekend, that if we get an overreaction, a correction in general markets, that can easily bring the dominance up. And I'm gonna cover in that what all the patterns that are currently breaking structure on the altcoins as well. We need to really double check that all the levels that we were talking about are still valid. So what else is important this week? From my opinion, the unemployment rate on Friday is also important. The way I see what's currently going on with the tariffs is that it can provide really great opportunities for traders. And I'm not just talking about shorting, but also catching very strong dead cat bounces and spotting areas of accumulation as well for the rest of 2025. Since we have a decent move now of 16%, you can see that the open interest aggregated across exchanges on Bitcoin still hasn't exited from any of the ranges. So Bitcoin is kind of chilling with this situation and just making a trip to the bottom of this range, but no breakout whatsoever. At the moment, the open interest is registering 29 billion and the bottom of that range is 28.7. So we are just 300 million away from testing that. What do we care? We care about pinching this, testing and breaking down. Losing this range is extremely relevant, but also losing it and coming back inside. I remind you that that event happened in the megaphone pattern in here. And once we reclaim the range in here, that's where we were extremely bullish about that potential to break out from the upside. So if we did something like that, I'm gonna continue covering this day by day, as assuming that we are still in a corrective move in the next couple of days, which might not be the case. Remember, general markets now hold the last word when it comes to saying let's discard the bearish news and let's go all back up all together, or yeah, more pain is to come. Therefore, crypto must obey and follow the same direction. I'm not expecting right now a decoupling of general markets versus crypto. The only hope that we have is that with crypto we have a weekend overreaction, and maybe on Monday they discard those bearish news on general markets, and then crypto follows up and goes back into the median again, in which case we have to look in those levels. If that happens, where are those levels? And I'm gonna share that with you in this video. So far we are 7% down. That is the current performance, but we hit way lower when we went to 91k. Let's start with the 4-hour because we are having something different in here. After hitting this resistance on the 4-hour 3 times, we broke out, we put a new all-time high, we came back to the scene of the crime perfectly there at 97.7. We enter at 98, and then we have a rally into 106. That is the one that I mentioned to you. Guys, there is a huge confluence at 102. That was this video 2 days ago. We were at that point at 106, give or take. I took profits and I wanted to test what happened at 102 at the risk of being wrong and then missing continuation to the upside. Then we hit the 102k, we stay very close to that, pinching it multiple times, and that's when I say, well, now we have the events of the tariffs, let's see how that plays out. At that point, we have these head and shoulders with a target into 96k. I say that from the point of view of technicals, that is low likely. From the point of view of liquidity, it's also low likely. All indicators were saying there is really not motivation to go there, except from the fear that came from general markets. And you can see that as soon as they talk about the tariffs and it started spreading like a virus across all retail, that were selling at a loss like crazy. And we did go to 96. At that point, I say we still have this liquidity in there. We might not be done with that. I was expecting just to pinch that, the 95, and that's where I have my first order. Low volume at 95.9. From 95.1, from 95.9, we went into 91. So I've been underwater with my first order now. We got close to my entry price in there, but this could be just a dead cat bounce and we might continue into the 88. And here is where we need to pay a lot of attention. The way general markets react today have the last word now on whether we fully capitulate and we go to 88k. And I'm talking about the 4-hour time frame. On weekly or daily, we might go lower if general markets produce a decent correction, which I'm not yet convinced. We need to see what happens, but I'm getting prepared both from the point of view of having a plan and emotionally, right? I have a position. It is on break even right here, which I'm not gonna close. I'm just gonna live there and plan for my next entry, which could be 88.5, subject to what is the sort of reaction in general markets. If general markets produce a really ugly reaction, then I might skip that 88 and average down with a level lower than that. And for that, we can look at 84, 85, which is now in the red, or even worse, the CME gap at 77k. And this is just to prepare you in case we need to sound the red alert because general markets are crashing. Those are the levels that I will add. I am not leaving a limit order in the exchange to just get filled in here without really knowing what's going on with the general markets because, you know, Bitcoin can crash 40%. And so far we have done just 16. So I don't want to average just with that without that context. Let's go back to the 4-hour. We are retesting now that scene of the crime for the second time, but this time we are testing it as a resistance. So there is at the moment a critical decision for the price, right? The price is going to remain against that resistance until it knows whether insider information or is common knowledge, whether we can go and hit up until 102 on all the levels that are really attractive at the moment, which I'm going to share later in the video. Those are coming from fair value gaps, liquidation levels, CME gap, and order book information. We continue on the 4-hour. Now we're going to look into the RSI, which is giving an early signal. What sort of signal? Well, this is the global support. We used to have the line like this. We pinched the line with PNR, and we had a rally from 90, 21% to the upside. The second one was we have to arrange this line, we pinch again the global support, we re-enter, and that is another signal, right? PNR got pinched as well. That was the rally when I add to 98 and it went 8% to the upside. Unfortunately, it ended up becoming the dead cat bounce that I was making you aware around that time. Yes, there was the liquidity to the upside, but it was challenged by the tariffs news at that point, the overreaction and the confluence at 102. I thought that 102 was going to hold purely based on technicals, but the overreaction carried on over the weekend, even with the low volume of weekend, crashing back inside the previous range and getting us in a similar setup. So if we replace this line like this, we get again the same kind of setup. Pinch the global, come back above, pinch PNR as well. And this line used to be the line for the global breakout, but then we have the fake out. So we have to place it like this, unfortunately, which makes it a lot harder now to identify a global breakout. We can do a local one, placing it like this, but really it's not gonna give us a lot of quality in the analysis. So I'm just gonna leave it like that, and I'm gonna tell you that potentially what could happen if the general markets continue bleeding on Monday and into the week is that you can come back below the global support. Think about this. Every time that we get the pinch, this, and this, you start putting higher highs and higher lows, and you do a whole wave into the top. We could see that. We could get into resistance at 54, 55, but for that, definitely we are now depending on general markets. If general markets are happy, let's see what that number looks like at the resistance, close to the median as well. That could turn into a rally into 101.7k. And that is a number I want you to keep in mind. Remember the setup of the head and shoulders. This one in here, it had the neck here, and a rally into 106 precisely takes you to the scene of the crime, in this case in an inverse order, right? We are going in that case into the neck again. So it makes sense. It needs the help of the general markets, and we need the RSI to stay above 28, okay? Daily. On the daily, we have the RSI 35 that we were tracking in case we continued the bleeding over the weekend. We did pinch the RSI 35. Indeed, here we are tracking it with red, and you can tell that that was at the time of impact at 92.9, but we went into 91.3, so around 1k further down, very close to the bottom of the range according to volume profile. We haven't yet gone into the extension Fibonacci. This extension goes from the highs to this pivot 97.6, then we have the rally into 106, and that projection gives us a golden pocket of around 88k. That's right in the middle at the moment of this order block. And when you get the C wave, the one that we were talking about at the 106, we were saying all the liquidity is in the upside, all the technicals are saying we're good to go, but we are in a context of a dead cat bounce. Let's always challenge what we want to happen. We wanted the price to go into the liquidity. We were bullish on that, but the 102k was such a tricky confluence, very difficult to ignore, and my plan was I'm gonna re-enter at 102, but then at 102 I learn about the news about the tariffs, and I say, okay, let's not catch a falling knife and let's see where this stops, and it carry on going lower. So I think general markets on this chart on the daily says precisely the same. We have done the extension of 1 and we are holding it now. We were beyond that halfway through towards the 1618, but we are holding the 1. So that could be the point where we reverse. Our reversal that will be lovely today is a daily close above the point of control, pushing into the fair value gap with a close above 100k, okay? That will look like a daily green with a long wick to the downside, with big volume spike in here, assuming that coming back there crashes as well the shorts. And that will increase this volume candle if we get it very high, let's say above this green one that we have there on the daily and above the average, which we are already there. then we get a strong confirmation with high likelihood that we could continue higher. The thing that is positive is that we have already been very close to the bottom of the range, which is what this guy in here was promising, just like this one did, and we did a journey back down there. So we have that recipe for recovery, but if general markets gives us another cold shower in the middle of the day, that cold shower is going to send us around 87.7 very easily. So how am I playing this? Am I waiting for 87.7? Nope, I'm already in a trade. So can I capitalize on a move up to 102 or to close the CME gap and all of those goodies if the market recovers? Yep. But what if things go really bad now? I have more cash to catch this one, and I have cash to catch the CME gap at 77k, I think it is. Weekly, okay? Things are gonna become a little bit more heavy here. Last night we were holding the 98.3. We lost it, okay? On weekly, we closed a weekly candle in the bearish area of the range. You can tell how many times we struggle around this area. Once you break above, you earn yourself a journey pretty much to a new all-time high. So my narrative now is, since we already went to pinch the lows, the only thing that we haven't done is to pinch the lower lows. We haven't been below 89. General markets can give us that. General markets positive. We also have the potential for this weekly candle to end up closing by next Sunday above 98.3, in which case we increase the chances of people calling this move there a relatively more bullish than this big red candle that ended up closing at the lows. If this one becomes green, basically you just see a wick that it got bought up from the very bottom, pushing it back up, and that brings that narrative of the bulls step in on the weekly, and we are ready to go to keep smashing 104.4 to produce new all-time highs. On the flip side, closing this week in the bearish area makes a strong case for the double top, which has a weekly target of 80k. Whether we can get there or not, that's a long conversation, and it requires a bit more of development in price action and in the charts to have more confidence. At this point in time, we are in the bearish area. We are a little bit more lean towards, yes, we are going to complete the M pattern, but the general markets can come at the rescue and change that picture, because we are doing an analysis on an intra candle. The RSIs on weekly oscillators seem to be testing this support. So we have an initial channel in here, is just a draft because we have 1, 2, and now we are right there holding that support, and a rally into resistance, whether we go for the gray or the yellow once again, assuming we get some positiveness in the market, has pushed up now the targets. Price goes down, targets go up of the RSI reverse. The yellow resistance is at 110. Actually should be 70 now, so that gives us 112.7. For me, that's a very important number that is going to come back up when we talk about the CPR analysis. I'm going to remove the green now. I don't think it's worth talking about that. I will say 70 is the number. If we take longer, we could get into 68. So let's maybe put 68 as well. That 68 comes from assuming that we get the same slope and we take longer to get into resistance, meeting with the gray line. So somewhere between 107 to 112.7 is something that is doable on the weekly, and that is assuming that we don't continue and we don't break below this apparently support in gray that I'm talking about. Both the SOPR of Bitcoin now and Ethereum are saying that investors are heavily selling at a loss. And looking at the Ethereum, I haven't seen in a very long time, with the exception of the bear market in here, May 2022, signals so many together and then further capitulation. If you look at the past performance in the bull market, Ethereum, every single signal so far has led to big upside. And seeing this is a data point by itself. Something happened that they really wanted to crash the altcoin markets. If we look into Bitcoin, we don't get yet a signal. Definitely Bitcoin is performing a lot better than the rest of the crypto market. Let's go to CPR, and that level of first support for February got pinched by the dollar. That is 91.2k. So how does this change things? According to CPR, now we have a reduced chance to to go in this month to the first resistance at 112. We are doing something that is positive so far. We are holding this line as a support at 95.4, but now we are facing the pivots as resistance. We just lost them. Is it impossible to go back above it? Not necessarily. Sometimes you do that. But pivots are in general a strong level of support or resistance. The pivots are between 99.5 to 101.6. So my setup, the one I'm chasing with my first order, is a rally into resistance. At the time we get into resistance, depending on how we cross it, if we go there and we stick there for a while and we start seeing bearish technicals, I might close my long again and look for re-entry lower. If things go very bullish and we get a V recovery and we start looking at the weekly and the picture is looking really great, I might ride it all the way up. But bear in mind, CPR is saying something a bit more bearish at the moment. CME gap. As we were expecting, we created quite a chunky CME gap at the top. Some people are saying the ones that are at the top tend to take longer months to get filled. Kind of disagree. I see them, pretty much all of them, getting filled in a matter of days. Only a few, very small selection of them falling into the 5% or way less take longer. So I keep above the price of CME and below I keep the price of Binance so we can track those numbers perfectly. So on Binance, the CME gap ends at 101.7. And if we were to go there, we need to first go beyond 98K and then we start consuming it. And I guess you're tired of hearing this, but general markets, it is a fact that it can definitely help closing this gap very soon versus taking a lot of time, if not months, to get there if we had a big correction in general markets. And yeah, guys, we are 3rd of February. Watch my video, the long one. I think I cover it roughly on Saturday, that there are 2 theories in place for the time that we spend above 70 on RSI monthly. The first theory says that we started those 3 months, the counting from November, then December, and then January, and that's it. In February, we're back below 70, and that constitutes the 92 days that we were expected to be above RSI 70 for this cycle. So pack your luggages and go home. The second theory says that we should look into 2017 because we have a spike above 70, we came back below it, but actually we started counting from there, from the first time that we are above 70 and we hold for long, in which case the first time will be January and then you get February and then March. But there's something, we are below 70 right now, so how can we count February? Well, in that case we need to have hope and wait for the monthly close of February, or at least until we see the price of Bitcoin going back above 100k, around there, so we can climb back above 70 and we can validate the potential to do a heel like this also into the resistance of 79 that now has increased substantially thanks to the price going lower. Now that initial target of going into resistance is 132k, but for that we do need RSI to go back above 70. Stochastic RSI has a very ugly cross in here, which I keep covering every day in case one of you hasn't seen it. A dead cat bounce followed by a dead cross after having been in the middle of the range or lower. It's a signal for starting a bear market. So in February we have a huge job to do. We need to undo this signal, which I think what we need is to go back to that price where we still didn't have it. And at some point we were talking about being at 102 and how close we were to close and confirm the signal. So pretty much we need to go beyond that and hold there instead of being at 95, 93, 91, because if we close February like that, then it's going to be very nasty, very difficult to navigate the market. You can tell that the drawdowns of Bitcoin around here are very mild. We are at the same drawdowns that we had in December, in January, in the middle of January. Now we are at around the minus 10 to minus 16. In the area of the megaphone pattern, we were having 25s, 20%, and in previous cycles easily a 30, 35, 40 and even 55. So that's why I'm telling you Bitcoin is behaving really great, not having a single tantrum with this situation in my opinion. You can see the big well explorer now is at 0.28. It's about to show more accumulation from large holders than at the beginning of the bull market. So definitely there is a rotation now of hands. Short-term holder realized price, I think we were about to pinch it. That is at 90.4K and we went to 91. So a few $100 away from the short-term holder realized price, which tells me that probably those short-term holders have or are about to complete their capitulation. In fear and greed, now we are in fear. It's been a long time, not that long really. Last time was in October. We pinched 50 or 60 a while ago. Now it's 40. And if you've been watching me for a while, this is Cerberus, an indicator that now is about to enter in the green. At these levels in here, all it takes is a little bit spike up of the price, and then we start getting the warning buy and the buy. That for accumulation tends to be really good. This indicator tracks all the stable coins and it gives you a stochastic view of the ratio of all the stable coins versus Bitcoin. And I've been using it for years without changing a single line of code to help me navigate the markets. I don't use the signal itself without challenging what it's saying, but to give me a poke in the shoulder and telling me we are around there, start looking for longs or start closing your longs. The most recent signal where this sell there and the warning sell at around 100K. Interestingly, the price hasn't moved that much like it used to, and we are already getting close to capitulation kind of signal. I wanted to look into the long-term holders also to see if there is any panic from them, and you can see that they just go sideways. They actually accumulated above 100 and they continue to go sideways. We need to see this tomorrow because we might not have the data of the actual move to 91. And liquidations, this data is extremely relevant and also is going to support my video later about the altcoins. If we focus on the last 24 hours and we just put Bitcoin, first you need to catch this number, 2.32 billion in liquidations across all crypto. And if we take just BTC, we get 464. And in my opinion, that is nothing relative to the full number. Pretty much this is the king, is Bitcoin. And the liquidations are just 20% of the rest of the market. Typically is around half or more because it's the biggest market cap, right? But that's just because really we have now the caution of institutions. Think who was accumulating ETFs. Are the ETFs open on weekends? Nope. Did they sell on Friday? No, they didn't. They actually accumulated on Friday. Possibly they didn't even have time to capitulate. So today with market open, we also need to track what happens to Bitcoin. Is Bitcoin gonna catch up with the liquidation, which we are not gonna see here? These are liquidations of leverage traders. But if we track outflows on the ETFs by the end of today, are we gonna see a big outflow because they also want to capitulate? In which case, if they do that as a reaction of the general markets overreacting too, that could add to the selling pressure. If general markets give a green light, potentially those outflows coming from ETFs are going to be reduced. Let's look at Ethereum, largest altcoin market cap in terms of liquidations. It even did more liquidations than Bitcoin, 600. So if you take the 400 and the 600, that makes 1 billion, and you still have 1.32 billions on liquidations on any other altcoin. And literally everybody was on leverage with the altcoins and got completely smashed. I think 2 billion is probably the largest liquidation across all the coins, not the largest with 400 for Bitcoin, definitely not. Okay, let's look X-ray section of the video and let's look at additional data. Funding rates are now in the negative. Okay, so that is a green light from the point of view of this metric. Longs are at the very highs. You can tell in here we were at this high 9th of January, 13th of January, around 27th of January maybe. But those are levels where it's a great buy. So you see here that is a buy. This other one at 89 is a buy. Loads of longs together with negative funding rates. And we also contrast it with the ask and bid liquidity, which we are going to do just now. And you can tell the bidding has been extreme on 27th of January. That is shown with green in the chart. Also in this area. This indicator is good to have it in the green. It's good to be beyond 0.2, 0.3. 03, 04 is great if we put it in confluence with other things. That means that there are tons of orders, limit orders below the price with appetite to buy the dip. When market maker sees a lot of bidding below the price, he just won't let them get that price, and he starts pushing the price away, and the market maker starts seeing liquidating shorts as more attractive than giving the pressure to retail to buy at those levels. See it as a demand versus offer. So we currently have that demand at 0.2. Is that the lowest it can be to be the best entry price? No, it's been better. It's been 0.31, it's been 0.4, but it starts to be cool, so we can overlap it with the other data. So I think from technicals, and that's why I enter this initial order at around 95k, is good. Is it perfect? No. General markets can throw us lower. Okay, I have cash for that. We are 700k in delta affecting the longs. That's another data point that is bullish, good enough for rallying up. We don't have any signs of buying in here from any Wells cohort, but we have some cushion there protecting the 90k with a few levels of $50 million, and there is an emptiness that starts from around 104k, and that is because the price went low too quick and some people didn't manage to place orders. I want to show you in the 15-minute chart. Actually, let's go to 5 minutes and let's see if the orders got really filled at 91. We were tracking 91. There was discussion, and you can tell that the price got in here and they pull out before it got filled. This level pull out before, and this level pull out before. So all of this is just tricking the market. So as I told you, option A, price never goes to these multi-levels of buying or selling. Option B, price goes to that and they pull out. Never take it very serious. That's my humble opinion. But luckily, the price ended up bouncing there. And now we're going to look at liquidations aggregated for 4-hour time frame. And you can see that we have pinch now, the liquidation that typically occurs very often, which is this green line in there. Going back in the past, longs get liquidated there, shorts is kind of the moda number, the most common number, not the average necessarily for big liquidations. Of course, we are gonna have to ignore these small numbers there. So we got 9th of December and now we pinch that. My speculation that at some point we're gonna get a liquidation of 900, still far. Bitcoin hasn't done a big move. This is just minus 16. When it comes to the delta, we are still hovering around here. No breakout, no entering in the golden area for the ratio of longs versus shorts. So you're asking, why are you buying there? Well, you can tell that in all this area, sometimes we don't go to the bottom. So you could miss. And to me, really, all this area is good, but it's a matter of a trade-off. If you wait for that and it doesn't come, you don't trade. If you go all in here and you have your risk there, you get liquidated if we go there. So spread away your risk. I make a little bit less, but I keep my win ratio to a very extreme high. Liquidation levels are at the moment in the last 30 days pretty much all on the upside. And do not get confused. This doesn't mean that there is no downside. It just means that from the point of view of what we have accumulated in the past 30 days, there is not much attractiveness. If you go with liquidity older than 30 days, definitely there is, right? So we look at trading different for that, and that's where we found this 85, which is the peak. But we could go also to 88, and that's it. 85 is really attractive. If we get there, that will be a great buy in my opinion. The first liquidation level is 96k. That is very close to the price. Let's refresh. It's still there. And then if we want to go for the next one, indeed the highest one is at around 106.5. Now the 109.5, which used to be the highest one, is second to this one, and you can tell that the shorts are in big risk here. Everybody's going short. There's loads of late shorts, many of them at 96k. We're gonna keep in mind that 106.5, but we are not necessarily gonna count on getting that far that easily. When it comes to fair value gaps, now we have the opposite picture, full of fair value gaps up until 104.1, and we took the 92.5. We took both of them that we looked last night. I was thinking we're just gonna take the 96, but we went way beyond that to 91. Now price needs to decide between just taking 1 or 2 fair value gaps and then going to 85, or doing a whole journey to 104 and then deciding what to do, which is why I'm starting to build that long position. Guys, as I mentioned, I'm gonna work now on a general markets video following an altcoin, Bitcoin dominance, others, and everything to do with altcoins, because I suspect that we are very close to what I will call an altcoin capitulation. And to me, there's nothing sexier than anything that has the name capitulation. That is where you have to keep your eyes very opposite to what I say when we are in extreme greed, which I say slap yourself to look for exits. Now is when we need to start looking for entries. What looks really great? I will really appreciate that like and that comment down below. I'll see you in the next videos. I hope you appreciate all the support over the weekend and today as well. Guys, if you want to trade on Bitcoin, on altcoins, and you want to do it in great exchanges, my favorite 2 exchanges to do my trading, thanks to all the products and altcoin alternatives that they offer, not to mention the quality of the execution itself, is Bybit and OKX. Either of them are giving very large bonuses based on trading volume. On Bybit you can get up to 30,000, on OKX 60,000. If you want to stay away from needing to do KYC, I have 2 exchanges that are non-KYC, so you can avoid all that hassle. That also means that you don't need to use a VPN, you don't have issues to withdraw or deposit crypto. You can have multiple accounts with different emails. And I'm starting today a new campaign on Bluffing, offering up to 100,000 based on deposit and trading volume. On 2bit as well, another non-KYC exchange, we're offering up to 30,000 in bonuses. All the links are down in the description. I see you later in the next videos. Thanks for watching. Bye bye.